Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click the notification bell icon so you don't miss our next live stream or next video launch here on YouTube every day. Make sure you start your day off the right way. Don't forget your free morning brief that's waiting for you at ssftg.com/brief. In the top left, you can click on morning brief to jump into that. That's where you'll find all of our major DP levels right up here at the top, as well as a quick technical overview for the major 6 markets that we look at: the NASDAQ, the S&P, you've got gold, crude oil, the euro, as well as Bitcoin. Maybe you're looking to get a full game plan for the day, week, or month. Check out the join button below. Level 1 subs get a brand new members only video every single morning going over the major 6 markets and a game plan for the day. In addition to that, once a week I launch a weekly brief, and of course once a month we have our monthly brief as well. Of course, all members gain access to our private Discord chat server, and if you really want to get into the nitty-gritty, check out the live analysis room for level 2 subs, where you can see my screens in real time during the New York Stock Exchange Open. You can ask questions and interact with the other members, as well as bounce ideas off myself and everyone else. It's a fantastic environment, and I would love to see you in there. All right, and now on to the really fun stuff, the topic for today. The reload dip and flip setup. So this is a trend continuation type setup, and it absolutely needs to be in your trading arsenal if it isn't already. This is when you have a market that is breaking out. It's breaking away and is, it's got a phenomenal trend going on. This isn't for a small trend or anything like this. This is when, you've got a really, really strong move going on, and that's when the reload dip and flip really is going to shine. This is not meant to be used in a range. It doesn't work in a range. Don't use it in a range. That's not what it's designed for. So firstly, obviously, we need a very strong, well-established trend, and this can be defined in a lot of different ways. For me, it's more of a psychologically based definition, but if you had to put a rule basis on it, at least 3 good legs to the upside or downside, 3 good legs in a direction would be enough. But generally, again, there is a lot of context, which is what we're going to be going a little bit more over in this video. But when we're looking at that move, a good unidirectional move with a few good legs. So when you have those really strong trends to the upside, what often happens in moves like that, right? Traders want to take profit or want to get in if they haven't had a chance to get in, but they don't want to get out of a trend like this and miss the chance for a huge move. So the next best option is to do what? Is to trail the stop, right? That's the next most obvious thing. Well, I don't want to get out. Let's trail the stop, right? I don't want to give this much back. So what often happens in moves like this, right? Well, traders want to take profit, especially if they've been long, obviously. If they haven't been long, they're going to want to get in on the trend. But they don't necessarily want to get out of the trend and miss the chance for more. So the next best option is to do what? Well, the next best option is to trail a stop. I don't want to take a target. I'm not sure where to take a target. Maybe there's no structure. Maybe you're at all-time highs. Whatever the reason is, if there's any uncertainty or greed, that's usually when the stop starts kicking in and it ends up being a trailing stop. Now, what happens in moves like this if they want to take profit and they're trying to trail their stop in an attempt to maximize those profits? Well, where do you think those stops are going to go? They're going to go below the most obvious swings, like we were just kind of outlining. Remember, we're talking humans. Simple, right? Keep it simple. It's got to be obvious. Major swing, obvious. Major swing, obvious. Even a little minor swing, obvious, right? They stand out. There's not like this little thing right here. That's not enough. That's a little baby swing. Not good enough. We're talking the really, really obvious ones. So let's flip the coin for a second. Typically, when there is a large trend that's ripping and going crazy, it's usually due to the market breaking out of a previous range or a previous structure. And since that's the case, when the market was in that range or in that structure or whatever it was doing, that typically is going to include a lot of traders who are going to be fading. If you're in a range, traders will fade the extremes of the range because, well, let's be real here, ranges don't typically break out successfully very often. They usually break out and they pull right back, and traders know that. So they stick with the side of probability and fade those areas instead. Now, the one caveat here is that, well, in this case, it didn't fail. It kept going, right? The range broke out. And when that happens, traders like you and I, we just get stopped out. We take our stops, we take our lumps, we go through the normal process, and we might take a little bit of slippage, but we're done. We're out of the trade. But institutional traders, large size, Goldman Sachs, all the big money, the billion-dollar accounts, they can't do that. They can't just jump ship on all their contracts because a stop got hit. If they do that, they risk the chance of creating a landslide against themselves, and then they take a monstrous loss that just, at the size that they're trading, it's not necessary. Remember, we're not talking 10 contracts or a few coins here on crypto. We're talking thousands. We're talking about market moving size. So in order to exit, what do they have to do? Well, they're kind of forced to average up along the way or sit on their hands and wait. Now, if they're averaging up along the way, they're going to reduce their size on the dips and add more on the rips, and that's going to create essentially over a period of time a break-even scenario or maybe a small loss. And what that's going to look like is, I mean, I don't think we have to point it out, but it's a pretty obvious breakout point right there. And it seems like sellers may have tried to get that continuation of the downside and they got steamrolled. When the market breaks higher here, there are going to be a lot of shorts who are stuck, whether they got stuck down here trying to short, stuck down here, whatever. Now remember, traders like you and I, we just have our stops get hit along the way, wherever your stop happened to be. We don't really have to worry about it too much. But when we're talking about institutions, they can't just slap the exit button, or if they are going to do that, they can't do it on full size if the size is too large. So they have to kind of work their way in and then work their way out. And the best way to do that would be trading above those highs, selling more as it rips higher, and then while the market dips lower, take a little bit of profit. Remember, first in, first out is going to dictate that these initial few times that happens, those are going to be losses. And it might end up being a smaller loss. But either way, the attempt is to mitigate the loss by adding in while the market's going up. And they have the ability to do that. We're talking, again, billion-dollar accounts. Unfortunately, we haven't figured out the unlimited money hack, but, well, they kind of have. So they can do these kinds of things. And when we're tracking these types of areas, that's really what we want to pay attention to. Because along the way in a strong breakout, if you're stuck on the wrong side of things and you need to get out, what better place to do it than where? Where there's a lot of orders being hit. Well, where would a lot of orders get hit? Below a swing, right? Why would a lot of orders get hit underneath there? That's where all the stops are. That's where traders who miss the initial move, they want to get in, but they don't want to buy the high. They want to buy on a pullback. Well, it's obviously a pullback if it's breaking a previous swing low. So that's where buyers are going to start coming in. They're coming in on the dip and then looking for the continuation back to the upside. And as an institutional trader, well, I know that a lot of trend traders who've been going along the way who don't know where it's going to go, they're going to move their stops up to the obvious spots. Here. Oh man, big breakout move. I'm going to lock my stop in real close. Well, if I'm stuck, if I'm on the wrong side of things, what better spot do you think that I'm going to utilize than right there that I'm going to be able to bounce and liquidate all of my orders or a good chunk of those orders and try to get out of my position relatively unscathed or for a small loss, and maybe even be able to start reversing and going long and flipping directions. That's exactly where that's going to take place. How many times have you had it before where you're trailing your stop, you get taken out to the tick just to see the dang thing go flipping right back in the other direction and go screaming right along where you thought it was going to go? You, along with everybody else, and if you haven't had this happen yet, it will, you were the liquidity to a larger trader who was likely absorbing all of those orders. And then essentially when it comes down to it, all of that volume in the same place all together creates this reload, this massive reload point that traders who miss the trend, they're able to buy in. Stuck shorts who were stuck earlier, they're able to get out. You're creating this giant vortex of orders, and they're looking to do the same thing in the same spot. And that's the reload on the dip that flips it right back to the top, or to the bottom if you're on the short side. So very important thing to keep in your arsenal and keep your eyes on. Really only applicable when you're in a strong trend, but, well, if you've been following along with the markets recently, that's kind of all we've had lately, and these have been all over the place. Fantastic setups to keep your eyes on. So hopefully you find that useful, interesting, entertaining, and something you can add to your trading tool belt. As always, stay safe out there, keep those stops in play, and let the winners run. Until the next one, we'll see y'all then. Thanks.